Greetings and welcome to all. This is the Sustained by Grace Ministries and Outreach program, nurturing your back to wholeness and life. This is your host, Marvin Lemar, and with me, a co-host, Tanya Rose and Romoy Lemar. And of course, very special guest presenters on set tonight, Miss Diane Campbell, which of course will be duly presented at such a time. We're so happy and glad that you have joined us for this viewing. Of course, our topic today will be question. The question is, why do people get into debt? And of course, the answer we must provide. The other side of the question is, how do we get out of debt? Very intriguing, very interested subject matter. One I believe that has affected persons locally and internationally. Business-like and in personal life, everybody wants money. So when we talk about debt, I'm sure the overall idea is about money and how we get out of that. So we're going to generate some discussion around that topic tonight, and we're going to ask, of course, Ms. Rose, what's your take or your perspective on this whole thing about it?
Okay, good night, everyone. Happy to have you back. Tonight we'll be looking on debt, and for me, debt is defined as owing money to a person or bank. And some of the most asked questions by people is, how did I end up in this state? How do I find myself with this amount of debt hanging over me? I'm not the expert here tonight, but we will hear ways in which we can actually get ourselves out of a situation before we start thinking in it. Okay, blessings.
Okay, thank you very much. It's Tanya Rose giving her perspective in a nutshell on what debt is. And I'm sure it's not unique to any culture, it's diverse. And it touches the Christian circle also, as it does in the secular world. Everybody wants money. What's your take?
Okay, good afternoon again, everyone, and welcome back to this very interesting program. Well, I think based on what is happening in today's society, debt has become a way of life. I mean, it seems to be the norm. However, the Bible said in Proverbs 22, verse 7, from the King James Version, of course, just as the rich rule the poor, so the borrower is servant to the lender. So we see that debt does have consequences. Sometimes we lose our resources, our home, our vehicle, our jobs, relationship. So in spite of the fact that, yes, sometimes it's very comfortable to get in, we know that it's hard to get out of. So we're not expert here, as we said earlier, and our expert is here to help us, because maybe some of us here, even said, maybe are in debt or maybe will get in debt in the future. So we're here to inform our listeners and ourselves as to how to avoid it or to get out of it.
Well, of course, sometimes I feel like debt is an addiction. I don't know if Ms. Campbell would be telling us that, but it feels like it's an addiction. Once you get into it, you want more and a little more of it. And sometimes you determine, I'm going to quit now. This is the last one. And then all of a sudden you enter into a bigger one. You take a little bite and it feels sweet. And then it gets sour. So I guess for our audience tonight, they are saying, yes, I've been there. I know that, and some are having mixed teeth at this time over the debt that they are bitten off. And so it's not easy. But of course, I want to throw it back over to Rama, I thank you, ladies, for those perspectives. And she will, of course, give us a formal introduction of presenter for tonight.
Okay, so tonight Campbell is with us. She is Senior Financial Services Specialist with the Victorian Mutual Group, right? And she has a wealth of knowledge, she has a wealth of experience, and she's here with us to share with us her knowledge and experience and how we can get out of debt and why do we get into debt and ways we can avoid it. Ms. Campbell.
All right. Good afternoon, everyone. Thank you again for inviting me, for having me today, where we're going to unpack debt, the principle of debt, and how it affects our lives. Now, Mrs. Lemard shared scripture from the Bible, which is what I was thinking earlier. The Bible did say that the borrower shall be slave to the lender, and we can see that happening. You know, when you go to a financial institution and you request to borrow to do business, you find some loans that you carry for your lifetime. You know, a mortgage ranges anywhere from up to 35 to 40 years. You finish paying that debt. The average person finishes that debt at age 70.
Wow.
And what did the Bible say about 10? Eh?
Only 70 years.
Right. So sometimes we find that we're carrying this thing for a lifetime. No, that is an obligation of one party to pay another, but that can be leveraged to make one wealthier.
Okay.
There's a concept of other people's money. That's how the rich stay rich. They borrow to make more money to stay wealthy. And we will get into that earlier. But the lack of knowledge, where lack of knowledge is, my people will perish. That's what the Bible says again. So if we do not know how to manage debt, then you find that you will indeed perish.
Yeah.
It will lead to other implications and consequences that none of us want. So debt is a good thing when it's used properly. That's how most of us get our homes, a mortgage, which is a debt, right? And what the rich do is that they will use that to get wealthier. But sometimes when we do not manage properly, that's when we stay in debt and indeed become a slave to the borrower. Now, what are the implications of debt? There is anxiety, depression, which leads to other sicknesses, we know, right? Other lifestyle diseases, hypertension, which leads to kidney disease and all sorts of other cancers. Having too much debt can also affect your credit score, and that affects your ability to get more funding from a financial institution. It may lead to lawsuits or harassing calls. I don't know if any of you have been there, but I've been there.
Okay.
You know, they're calling you, where's my money? And you get nervous when you get those calls, right? It can affect how soon one leaves the labor market. Now, retirement is age 60 for females and 65 for men. If you're too much in debt, you may have to work longer than the average person. You may find yourself working at 70, 75.
Yes.
Right. Another implication is that when you have too much debt, when you're ready to borrow again, you may experience higher interest rates from lending institutions. They might say to you, okay, you know, you're a high risk borrower, right? You're not managing so well. So this is a consequence of that. There's also financial insecurity on your part. There's also the inability to fulfill dreams that you would have had. You know, a special vacation that you'd have wanted to take, some treat that you'd have wanted to give your family, or some investment plan that you'd have had that you're not able to materialize on because you're so much in debt. Now that we have discussed the implications, some of the implications of it, because there is more, but those are some of the main ones. We can now just touch on briefly, how do people get in debt? It's like you said earlier, It's easy to get into and hard to come out of. Somewhat like gaining weight. Easy to put on and hard to take off, right? Because everything seems so appealing. The credit card, it's easy money. The same day loans, easy money. When you access it, everything becomes so much more appealing. The dress, the new dress in the window, the new shoes, the handbag, the hairstyle, whatever you can swipe your card to access, you are ready and willing because you have access to this money, right? So everything becomes appealing. No, why, how did I end up here? That's the question that we sometimes ask ourselves. And these are some ways we've identified why people get into debt, right? So there's the concept of, or the principle of keeping up with the Joneses. That's where people want to live like their colleagues or their neighbors. You went to college with someone, they're driving a new BMW or a new Mercedes. You're thinking, I should be driving one of those.
Yeah, so why not?
Right, they're wearing some nice expensive shoes or they're wearing a nice Movado watch and you're thinking, I should have one of those, right? You want to fit in. And I have observed in my years that this is especially popular among professionals, young professionals, the lawyers and the doctors, right? They have a colleague who has bought a spot of land up by Cherry Gardens. Best believe they want a spot of land up there too. Because everybody's still competing. You know, they're competing to see who is ahead of the game. And this is popular among men. I have a colleague who is in the legal field. And that's what he says. That's what pushes him. He's like, you know, he's comparing himself to his other colleagues and he's seeing what they're doing. And for those who have kind of cut back, he's like, no, they're no longer a benchmark for him. So people are actually still practicing this principle of keeping up with the Joneses, right? Benchmark in some cases. But in other cases, it can be negative when you cannot afford it, right? Because you might see your colleague buy a spot of land up by Cherry Gardens, but you don't know their family wealth. Maybe they didn't incur student loan. You may still have that servicing, they may not. Maybe they would have come into some series of wealth. Maybe they would have partnered to move forward. But we as Jamaicans, we're not looking at the full picture. We're just thinking, okay, they have this, I want this.
There's a question that I want to ask. You said you spoke about the credit score. Okay, what if I borrow a loan from not a what you would call it now, like a banker? Because you know you have the little small loans place.
Right.
Walk into your branch. I have to tell you that I had already borrowed money.
That you have.
If I don't tell you, how would you find out?
All right. So some of these institutions do report to the credit bureau, and that's where it's revealed that you have a loan there. It's good to always start with full disclosure because there's something called integrity. That's how we operate in the financial sector. So there's a level of integrity that we expect from our customers. If it is that in inception you do not declare the facility and we end up finding out, or let's say the individual was dishonest about it, they deliberately said no, they do not have one, and we find out later on during our investigations, it paints a picture that this applicant is dishonest or want to do business with somebody who is dishonest. They may not service the loan as how we would want them to. So I would caution individuals to pull a credit report of their own. You're entitled to one free one from the credit bureau per year. Can review it to ensure that all your records are intact and up to date. And be aware of who you're doing business with. A lot of institutions are now reporting to the credit bureau. So we will recognize that you have a facility, and also the report shows us how you've been maintaining the loan. So we do not say to clients, you cannot borrow. We encourage you, however, to pay on time, pay off early if you can, and just to ensure that you're not late, because being late affects your credit score.
If someone borrow money or a loan, good amount of loan, and started paying it, and within that time frame, the person is diagnosed with a terminal illness, how do you guys deal with that?
Right. So there's some
Are
loans are insured with creditor life insurance in case of death or terminal illness or unemployment or disability. So if any of those should happen, then the insurance would clear the loan balance, depending on where you're doing business and what facility you're trying to access. All right.
Okay. Compulsive spending.
Right.
And you had look at the
Keeping
pride,
up with the
social
Joneses,
status.
right?
Right, but
Right.
what about a person who, for example, not compulsive, not want to keep up with the Jones, but maybe they don't have enough income?
Right. So we're getting there. So there's also if somebody is not earning as much, we are encouraged to live within our means, so to speak. It's a hard pill to swallow because the average Jamaican is saying, I'm living below my means, right?
Yes.
But what that simply means is if you're making a certain amount of money, then you're gonna have to get creative with how you are going to let that money serve you for the end of the month and get some savings out of it. 50% of your earnings should be spent on your fixed expenses, 30% on variable expenses, and the other 20 should go towards savings. Now, when I say find creative ways to allow that money to serve you, it means that you're going to look at your lifestyle and switch up some things. Because where I'm at now is not where I was 20 years ago or 10 years ago, right? 10 years ago, I was probably making 1/3 of what I'm making now, but I survived, yes? And it's not because inflation wasn't high, but because there are certain things I knew that I could not afford a car, so I had to take the bus. I could not afford to eat out, so I had to prepare my meals and take them with me. I could not afford to go out with my friends every weekend or ever so often, so I'd have to find other ways to hang out with them without breaking the bank. I could not afford to buy new clothes, so I'd have to just ensure that I wear what I have. New shoes, if something happens to it, you get it repaired, rather than there's a principle of recycling. So you have to live within your means until while you're living within your means, it doesn't mean you should stay at that stage because you want to enjoy life to the fullest, right? And it takes money to do that. So does that mean you will have to get further qualifications, get another skill set, tap into your talents, start a business? What would it take for you to upgrade yourself in order to live a specific standard of life? Which brings me into the next point, right? So a lot of us, I'm saying us because while I'm talking, I'm preaching to myself. A lot of us, the moment we leave from this stage and get to this stage, as it relates to a salary increase, that change in salary, this amount that it changes by, it goes into another expense, another loan, another service. We're not saving. Yeah. We're using that new income that we've received. We're not saying that we're not living within the same level. We have now decided that we can get a new house in a nicer community. We can change a car. We can go to hotels, whatever it is. We do not believe in delayed gratification. No, that same example of the colleague I spoke about earlier, while he is measuring himself to his colleagues, he's also very focused in the sense that he says to me, You know, it's not that I don't want to go to Europe and take those fancy vacations. It's just that right now, my focus is to put things in place for my retirement. He says, I know I may not live to retire, but just in case I do, I want to be comfortable, right? And he's
So
making like about
cool.
15 million per year.
So
So
can't you do both? Can't you enjoy life now and still save for retirement?
yes, you can, but it depends on where you are now in life. So if it is that you just started preparing for retirement, you're gonna have to do some delayed gratification, right? So once you have pooled enough funds together and there's room for other things, I would say splurge. And of course, we all intend to do that. But a lot of us, we see persons who have been working all their lives and they're driving a nice Benz. The young people look at that on an older person and say, okay, I want one of that too, but they don't see the work that went into that. So they want it now. And I've had many of those customers.
Money.
Yes, I've had many of those customers. They come and they buy the expensive vehicles and the loan just end up not being serviced properly because life happens, right? There's also the concept of emergency. Why do people get into that? Sudden emergency. DEATH, right? There can be a sudden death in the family and there is not enough savings for that. There is no insurance, family indemnity plan for that. So you will now have to go into your resources to lay that family member to rest. I've also seen cases where people are earning good money and you say to them, you know, what happened to your savings? They say, okay, I lost my dad and I had to bury him. Nothing is in place. So these are some of the things that put you in debt because you have to take on this extra loan sometimes to put your family member to debt. Or sometimes these family members leave you with an obligation. I've seen professionals who their parents have gone on and they leave them with some big debt. So instead of pursuing their dreams of buying a home, they can't afford it because they're busy clearing mommy and daddy debt. DEBTH, right? And also divorce. Divorce is the other topic I'll touch on, or the other point rather, that causes persons to end up in DEBT,
So
right?
the marriage dead and they are left with debt.
Exactly. So people get together. Sometimes there's chemistry, but there is no compatibility. Whatever the reason is, you decide that you have to go your separate ways. And you find that sometimes these situations get very messy. They end up in the court and the judge rule in the favor of the woman most times. They say, okay, this house that you've acquired together, you're gonna have to give her or him 50%. One party typically wants to buy out the other party. And that's not always cheap because in most cases, the price that you got that house for is not the price that it values today. So if it's now valued at $40 million, you're gonna have to pay your partner half of that. The average Jamaican don't have $20 million saved. So you will now have to borrow again.
$20,000.
You'd have to now borrow again. You know, you are in the prime of your life, in your 50s, and you're going to take a loan for $20 million to pay off this other person. A lot of persons opt to do this because if you sell the house, the money that you get from the sale, your portion won't necessarily be adequate to get another house of that size or in that neighborhood. So a lot of persons decide that, okay, I'm going to get a loan and pay you off. Now, a loan at that age in life is very high. The monthly payments are very high. So if you're not earning good money, you might not even be eligible to get that loan. So divorce is very nasty sometimes
Expensive.
and expensive. Yes, right? So we want to be mindful of that.
persons, right? I know you spoke about the persons who are not living in their means, but there are some persons who really don't have anything to spend, but they still have to provide for their basic needs,
Yes.
the
Yes.
housing, the clothing, the food. So
Right.
they have to find money somewhere, even if they don't have it.
Mm-hmm.
You understand? And that too put you in debt. How do you look at that?
Well, I can't speak to all the cases, but growing up, I came from I would say, poor background. When we were growing up, we didn't consider ourselves poor. But looking back, I'm like, we were poor, okay? We grew up poor, but we never went to bed hungry. And I'm looking back at some of the meal items that you fry a dumpling and you make it porridge and all. We were happy children. Those days are behind us. But I saw that my mother was creative. My parents, they were creative in taking care of their children. And I look and I wonder, how did they do that? Right? A lot of persons who are in that category, sometimes you see them buying KFC, you see them doing this, you see them doing the
Is it
KFC line
bigger
is ever
style?
long. KFC line is ever so long, right? And it's not always the people on the higher scale that's in those lines, right?
So
Yes.
These things add up.
Truth.
These things add up. And I'm like, how do these people afford to go to KFC every weekend, every day? I can't afford it.
Okay.
But you find that people, they live in the here and the now, and they're like, listen, you not even know if you're gonna live to see tomorrow. Yeah, what if you live to see 100? Right. So I know that people struggle at times, but I've also seen where people mismanage their funds. And I'm not saying you shouldn't enjoy life, but balance. Balance.
time
Balance.
leads to poverty.
Right. So sometimes it's how we manage. And do you know that these phone companies, they make most of their profits from third world countries?
Yes.
Exactly.
Right. Who is supporting them?
Persons
Okay.
who can't afford it.
Right. Who do we see in the bars?
So we have a money management problem then.
We do. They do not teach financial education in the schools at
Mhm.
any level. You learn that on the job,
That's true.
or if you're reading. So our people are suffering because they don't know. And of course, there are some of us who lack the discipline. We know better, but we lack discipline. That's also another thing. Also, gambling. Who is supporting these businesses? I'm not saying the rich don't do these things, because they do. They
Majority.
have the money to do these
But
things.
maybe they just want to get rich, so they gamble. I don't know. They spend the little that they have trying to get more.
Trying to get rich.
Well, that is true. But are you any richer than you were 10 years ago?
No.
So
I
I'm
can
not
answer that
saying,
question. I'm not a gambler.
right. I'm not saying people don't have legitimate reasons. We're in a high stress environment. There's wars and rumors of wars. There's COVID. There's monkeypox. There's inflation that is through the roof, and your salary not climbing up to meet that inflation. So people are very stressed. So whatever medium they can, they're gonna try to unwind somehow. And we can't always knock them. But people have to be aware of their financial position and have a plan how to get out of the situation and not stay there and let debt pile up. Another thing that we're guilty of is that we dig ourselves deeper into debt. I had a client, or have a client, still my client. I can speak about this because I'm not sharing names. Just share an example because maybe somebody's listening and they can resonate with it. So she's making good money, professional, trained, and she doesn't have there's no disposable income. And what that means is after you pay all your living expenses, the day-to-day living expenses, there's no money to save to do anything. And I said, what's happening? She had an addiction problem to Lemard. Credit card was high, unsecured loan from the same day loan institution, mortgage, car loan, all sorts of things. And she was not allowing herself to breathe. She was just piling up the debt. We helped her to consolidate and get out of debt. Here with this solution, the onus is now on you. Because we can't help it today, I end up back in the same place. I called her and I said to her, what is happening? She wants to do some work on her place. I said, hold on. You just change the car. Allow yourself to accumulate some more savings. That money that you got from the sale of a property, invest that. Do not spend all of that money one time on renovation, right? Take your time. Some of these things you can do out of pocket. Some of these things are DIY. You know, we just want everything one time. So,
Miss Campbell, what you find though, especially in the churches, when persons, as I said, you're making good money, you don't see where it's going. We have a way of demonizing everything. We say person obey you, or it's the devil, and it's never us.
because God give us the money, you know, but we don't manage it properly, right? Even though we're tithing, even though we're giving. So the onus is upon us to track our spending, make a budget, and stick to the budget. Because a lot of us make the budget, we don't stick to it at all, right? Watch that budget, man. Watch that budget until you're no longer required to. You know, when you're in a comfortable place and you can live comfortably, fine. But for now, watch that spending. There are apps that are available you can download on your phone. You can track your spending anytime you spend on something unplanned. You can plug it in there. Budget for miscellaneous expenses, but watch that budget. And that's one of the ways, important ways to get out of it. Budget. And then we spoke about saving earlier. Doesn't matter how much you are making. After you give to the Lord, save. Your savings is your pay to yourself. And we encourage you to save at least 20% of what you earn, right? And don't watch the tithing aspect in terms of, oh God, you know, this for 10% and it's kind of tight. No, you cannot outgive God. You find the moment you give, something else is released to you that you could not have even paid for. So always honor the tithing aspect of it. And as best as possible, save. A lot of us are challenged by that because your pocket is something constant. You can avoid that if you're formally employed to have a salary deduction in place. Send it over to that institution. When it goes there, you have no interaction with it. Ensure you don't have a debit card to that account. Because you're going to remember, say, oh, you know, I have $100,000 in another account here, and something will come up. I may need a new dress for Women's Sunday, something like that. Ensure there is no debit card assigned to that account, right? Budget and save. It makes no sense you save $1,000 and then you go back and take it out at the end of the month. Had a client like that as well. He's now passed, so rest in peace. But that was what he was doing. As he was 65, he got his gratuity payment. And I said, okay, we can invest this for you. Do you have any other savings? He says, no. I used to save $2,000 every month, but you know, I have family to take care of. It makes no sense you're saving and you're using it back out. One step forward, 10 steps back. I always say that. So ensure that if it's $1,000, let it be $1,000. Don't try to save $10,000 and you know you can't. You're gonna need the money. Save what you can.
For persons who are in debt, what can your bank do in like refinance for like lower interest rate and so forth, or other?
Right. We can refinancing is a little bit tricky, but for persons who are in debt, there is that facility where you can refinance your home or refinance the loan, depending on the amount, and it depends on my advice. Sometimes these personal loans are 5 years. You're in your 4th year. I wouldn't recommend a refinance at all. because you're starting over with a new facility for another 5 years. You'd have already paid off most of that money. So refinance it is good, but it's not always the ideal thing. It depends on the individual and where they are. So you might say, oh, this monthly payment is lower. Let me refinance. If you're in your final year, no, finish off that loan and say goodbye to it rather than refinance and start over. You're paying twice the amount you would have been required to. So it depends on the scenario. So we do have unsecured loans that persons can tap into to consolidate their debts. This is where home ownership is also important. You can borrow against your home if it is that you feel like you're overwhelmed. If you have a house and you also have a personal loan, maybe you're paying 90,000, 80,000, and it's eating up all of your salary. You can come to us and say, okay, can I refinance this loan using my house? The monthly payment will be much lower because you're getting it at a single-digit interest rate rather than a double-digit interest rate. So it's gonna be like maybe 1/3 of what you're paying now. So to each his own, right? It depends on the situation. We don't always encourage persons to borrow against their home. Depends on what it's for. Because that's your equity. And if you really need that equity for something serious, then, you'd have had easy access to that. So it depends on what the situation is. And that leads me to my last point, which is to pay off high interest rate debt first. In the times that we're living in now, when cash is king and the person who has access to the most cash can negotiate with the buyer or the seller, we would say to people, the more disposable income you have, the more you can negotiate the terms of your transactions. So persons who have the cash, they're the ones who are staying ahead of the game now. They're the ones who are outbidding on these properties. They're the ones who can get these deals and these transactions and equipment because they have access to cash. So once you pay off your high interest rate financial obligations or debt, then you'd have had more disposable income coming into your pocket that you can channel into savings or investment.
Okay.
So pay off the high credit card, pay off the personal loans and the unsecured loans, and try to manage your debt as best as possible.
Person would say, Miss Campbell, get rid of your credit card. Do you think that's a good idea?
Speaking from experience or speaking as a banker, which one? Credit cards are for disciplined people.
Okay. Not
I
like me
struggle
who
with
is so
that thing.
indisciplined.
I struggled with that thing, man. I struggled with that thing in my 20s. So I now have I'm cautious about credit cards personally, but I've seen where they can be beneficial. I see people traveling, taking plane like taxi. You know what I'm travel? Credit card points. One of my points from credit card. Right. One of my seniors, he said to me, that's how I bought my lumber to build my house. The points from my credit card.
Okay, so I'm spend a lot.
Right. So what people who are disciplined do, they're living expenses on these cards. Living expenses, right? They know when to spend, when not to spend. There's a strategy. I won't get into that much. They pay off all that they have spent so they can avoid interest. Say you have a credit card with a limit of 500,000 and you maxed it for the month. They don't pay half of that. The people who are wise and know how to use it, they don't pay half or a quarter. They pay everything so they can avoid interest. Right. If you pay half, you're gonna accrue interest on the balance. If you pay the minimum,
some bank give you the interest on the full amount, even if you pay some of it.
Right. However, yes, however, it's how they calculate it, but there is a way that you can avoid the interest, and that's by paying off all that you have spent.
But if you max a $500,000, how are you gonna pay that off if it?
That's where I was going. You know, the financial institutions are smart. Commercial banks. We're not a commercial bank, so I can say commercial banks. They will call you up and give you a card. You're earning $250 per month, and they'll give you a card at a limit of $500,000. And you're so excited, you grab it.
Yeah.
But you're not thinking that you're not earning $500,000 per month. What are you doing with this card? You know? And especially if you're indisciplined, you're gonna max that card. So I would say to persons, if you're getting a card, try to stay within your earning capacity, right? Or try to spend within your earning capacity. That's one of the things you can do. Even if they offer you the 500, you can ask them to lower the limit for you. Maybe you can get an increase if you have an emergency, but try to pay off what you've spent before the due date so you can avoid interest. But credit cards are beneficial if you know how to use it. If you don't, I would say get a low limit card. Get a low limit card if you need one. Pardon me,
Ms.
Salaman?
Campbell?
Yes, sir.
All right, so very good presentation. Of course, let me just ask you, I already speak about, you use an example of maybe it's a client about passed on, you know, etc. The debt. I just want to ask if when a person pass on, if there is it's a joint debt between two persons, maybe the partner and one person, that debt is left to the living person to pay?
It depends on what type of debt it is. It depends. If it's a mortgage and they have life insurance, the debt passes with the person, the deceased, when it's closed. It's covered by the life insurance. If there is no life insurance on the loan facility, then the guarantor or the co-applicant will be required to service that loan.
These type of a debt arrangement, it's mandatory that we have insurance.
No, not all personal loans. No. So the client can request, because that comes as an additional fee. They can request that this loan be covered with life insurance. They can request that, depending on the facility.
Okay. All right. Thank you. What's the ratio like? I know VMBS, they do have a lot of customer. Yes, I'm part of it, might be. But do you find that you have more female borrower versus male, or is it more male than female? I like to know who
Yes. And there are several reasons for that, It's not because women love to borrow money. There are several reasons for that. And that is probably one of them. You find some men, they don't like to owe. And even if they borrow, they want to pay it off quick. Some men are like that. Like, man, I like borrow money, and I'm going to pay this off in a year or 5 years. I'm not like borrow. Men are typically like that. The other reason we find is that more women are formally employed, so it's easier for them to borrow. So in some cases, when they're borrowing, it's not even for their benefit, it's for the husband or the spouse. No, man, we're not biased. I said that to say that some men, most men, are informally employed, and they do not always have a good record of their finances.
Requirement.
Right. So most taxi men don't have a bank statement showing their true earnings.
Right.
They will have a bank account with their savings, but we ask them to share with us what your earnings are. You don't get a pay slip, so we need to see how much you're earning via your bank statement. And if you're not keeping proper records, putting that money to your bank account, we will not be able to adequately justify your income. A failure to do so means that we'll not be able to lend you because we don't know how much you're earning.
Yeah.
And it is because of this, we find that some men probably stay away and pay for things out of pocket because they can afford it and can't deal with the bank system because too much question, But most women, you find that a woman is a secretary, they get a pay slip, they're working as a cashier, they get in the pay slip, the money goes to a bank account. So it's easier for women because most women are formally employed. They're the ones who, most women are enrolled in a university. They're the ones who get the formal jobs. So it's easier, so to speak. And outside of that, they don't have an ego issue when it comes to borrowing. So it's not because the banks are biased to men. It's just how our society is, I would say.
So going back to what you talked about earlier about we're encouraging persons or audience to delay that, call about delay gratification, and we know that's general in its term, but as it relates to money, why should I put off 3 years, 5 years down the road trying to save when I could get more from the bank? And it's a double-barreled question, really. And is it realistic that I could really save to get that dream that I'm pursuing? I could get it tomorrow if I go to the bank. Why wait 5 years or 2 years to get that?
All right. So when we speak about delayed gratification, we are speaking about how we live day to day. To buy a house, few people can save towards that. Very few. You're gonna need a mortgage. Average person is gonna need a mortgage to buy that house or to access that house. So delayed gratification means how we live day to day. So let's say, for example, I want to go to Paris on a vacation. I don't have savings to go to Paris. It is a vacation. Therefore, it is wise for me to say, okay, I can't go to Paris right now because I don't have the savings. I also have a credit card that I could use with a $500,000 limit. Maybe that will finance my trip. The late gratification is, okay, you cannot afford it because you don't have the cash now. So do something you can afford and save towards that, right? So delayed gratification is day-to-day experiences, goals that we have. I can break it down. The fancy phones.
Right.
People take loans to get gadgets. People take loans to have their weddings. This is where the principle of delayed gratification is important. You can't afford a fancy wedding with 100 gifts.
Yes.
Why don't you just go down by RGD? You don't have to not get married. Go down to RGD and then you delay the fancy ceremony for when you can afford it.
Right.
That is good when it's for an investment purpose, like buying a house, right?
So I hear you saying to persons, it's not that you should not have these desires fulfilled,
Right.
but prioritize. This
Absolutely.
is necessary, and let me put this on my bucket list. It's down there until
Yes,
I actually bring. Okay.
Absolutely.
Yeah, that makes sense. Much sense. And I think we would alleviate the debt situation, and killing that we sometime find. But what about higher purchase? Sometimes we're encouraged to put things into higher purchase and lay aside, and it's catchy. You go to the store, you go past some of these nice stores, and your eyes jump out of its pocket, and temptation come in, and you give in. Your husband or your wife or your children.
It's like you're reading my mind, Sir Leonard. As I was talking about delayed gratification, I'm going to share my business. I remember the higher purchase situation that I had. It's like every mistake you can make financially, I've made it.
I mean,
I'm not ashamed of it. I've made it, and that's how I've learned, apparently. So when I bought my home, delayed gratification is something I knew about. I was in the financing sector, and I was like, no, I need my house to have these nice new furniture,
yeah.
right? So I have a new mortgage. I have new expenses that come with that house. I looked on my budget and I said, there is no room for anything here, but I need this furniture. And I know it's a challenge because, as I said, I've been there. So I went down to the fancy furniture place. I was not calling any names. And I took out all these furniture. And
Yeah.
as sure as night is day, they had to come back for them because I could not afford it. So trust me, I do understand, but we have to be disciplined because some things can be avoided.
That's
No,
customer.
And that was one of them. That was one of them.
Yes.
So when they took it, I had to save and buy one by one. So I've been there. I've been there. And I know it's challenging.
Achieve your objective there, saving towards it.
Exactly. But I wasn't with the delayed gratification. I was like, no, I need this now. But I learned my lesson.
All right, Ms. Campbell. So I know you gave us a lot of solution as to how to get out of debt, right? So a person who is already in debt, right, maybe indebted very high, right, and need to get out. The earning power is not great, but the debt is high, and they still have their everyday needs to be met. Which one of those solutions would be the best solution for that particular person?
Well, that person just have to make up their mind. First of all, that's the first thing. They have to mentally decide that, listen, I'm getting out of debt and I'm getting out at this time. The Bible says, write the vision and make it plain, that he that saith it may run with it. So you're going to write it down and you're going to say to yourself, this is what I am doing for XYZ time. It means that you're going to have to sacrifice. You said that they're making a little bit and they have the day-to-day challenges. Look and see what you can sacrifice. Look and see what you can sacrifice. When I just bought my house, callaloo and rice. I couldn't continue eating chicken and those fancy things. You have to cut back. You have to make sacrifices, right?
Oh,
You
yes.
have to.
Oh,
You have
You
to.
sure you're talking to the typical Jamaican?
Right. You have to. You have to make sacrifices. And we have to get creative. Some of the times we're giving away our talents and our resources for free. You're babysitting for free. You're plotting your cousin here for free. All of these things when you could have been earning from them, right? We have to get creative. Sometimes it may mean downsizing because a lot of people you see dress up in tie and high heels, they're also heavily indebted. But can you trade in your vehicle? What can you do? We have to get creative if we are determined to get out of it.
Okay, like that. So a part-time job would be very useful for that person.
Right.
Well, I like the scripture you have. I have another one I would like to share. Proverbs 21 verse 5. Good planning and hard work lead to prosperity, but hasty shortcuts lead to poverty. So that's something I would need to do, as I said, do some good planning and put some work in it to get out.
Yeah.
Because it's difficult to get out, but it's possible.
Right. It is possible.
You know, I'm accustomed to one of the Christian belief. And of course, we believe, I have to say we because I'm also a part of that culture. You know, we pray. Prayer is a principle. We know the Bible says that money answereth all things.
Yes.
But we believe that prayer answered all things. And there's a lot of folks who are heavily indebted. And we have this kind of a notion or expectation that divine intervention is available. The banks will call me, the credit union will call me, you know, the debtor will call and say, the loan has been paid off. Is that to be expected of us? I don't know if you can answer that, you know.
I can. I can answer that. No, I've had testimonies of divine intervention. So I am a strong, avid believer in miracles. And I do believe that God can divinely cancel it. He can divinely order amnesty. He has done it before. People have testified, and I myself have been a testimony to that, right? But there's a part that we also have to play. And
Yes.
once God sees that we are being a good steward, then he will honor that. He will hear our prayers and he will send help and send divine intervention. We've heard of cases where the financial institution called and said, oh, the debt is cleared, or oh, you've been offered an amnesty. You only have to pay 1/3 of the balance. Situations like that, they do happen. They still happen right today. But there's a role that we have to pay. If you owe the people their money, pay them.
Amen.
Pay them. Pay JPS, pay NWC, pay courts. If you cannot afford it, give back the people them things.
Simple.
Right? Return the items. But don't dig yourself into a ditch and then say, God, save me. I mean, we both too, right? We fall into a ditch and we cry out to help. And God is merciful and he will help us. I mean, I've experienced God move in my life financially many times, and I have not always been a good steward. But while we are expecting him to move, he also says, my people perish because of lack of knowledge. So once you have the knowledge and you're doing the right things, he will help us to channel our resources properly and wisely.
You heard it right here. And right now, alive and in living word. If you owe, you have to pay. You can pray, but it's best to obey. Oh, thank you, Mr. Kando, for those words of insight, encouragement, and knowledge and wisdom being shared, both biblically and from a secular perspective.
Okay, guys, I just want to remind us about our training programs that we're offering. Hope you'll just sign up for one of them as we seek to equip the body of Christ and other persons, you know, to effectively work in your vocation, such as in church administration, church leadership, ushers. We have programs as health ambassadors, and we also have Christian entrepreneurship. You can call us or WhatsApp us at 542-5590 or send us an email at info@sustainedbygraceministries.com. That is 542-5590, or send us an email at info@sustainedbygraceministries.org for more information on how you can register for one of our training programs. Looking forward in hearing from you. Back to our host, Marvin.
Thank you, Omai, again. But before we leave, Rose, you have anything to say lastly before I allow Miss Campbell to tell us, our audience, you know, what I know she's a part of the VM group, so I don't know if there's any information you would want to give. So persons living out there already in debt who wants the assistance to deal with that financial advice and whatever products you have available, and to also persons who may want to join that organization, etc. You can give us the necessary information that you would like, or contact that you want to give us.
Okay, my take on all of this knowledge is that, look here now, you know your income, so please live within your means. Be content in whatever state you find yourself in. Don't follow the Joneses. Don't follow the Joneses. I have a friend of mine that had said, you know your income. So please live within your means. Be content in whatever state you find yourself in. Don't follow the Joneses. Don't follow the Joneses. Struggling at times that, you know, we take out loan to pay off another loan. And it might look like an easy thing to say that, all right, I just borrowed this money and I deal with this loan. So that's like a breather. But then you're still, it's like you're not yet clear because you still have this loan to pay off. And it's something that most of us, yes, we have struggled with. And it's fast money and fast furniture, fast house. But in the end, when they come to collect back their property, it's not fast again. So I'm telling you, I am inspired. I'm inspired. Thank you very much, Ms. Campbell.
Okay.
Thank you, Mr. Rose.
Final word, Ms. Campbell.
Right. Just want to say thank you again for having me this afternoon. It was a very good discussion. And I want to encourage persons who are indebted to reach out to a financial advisor. We have 16 locations island-wide. The contact information is on our website, www.vmbs.com. You can reach out to an advisor who is close to you and just have a candid discussion with them as to where you are and where you'd like to be. It is our goal to help you on your journey towards financial independence. If it is that you are interested in becoming a member of the society, there are benefits to doing so. There is no charge to use the ABM. There is low or no fees. And we pride ourselves in our members. We give back to you. You get cash back in your pocket by some of the fees that are not levied to you. As a member, you are part owner of the society. And as such, we encourage persons to come and be a member of Victorian Mutual Group. We have a wide variety of products and services that we have to offer the public to help you on a journey towards furthering your education, home ownership, getting your first car, savings, investment. There are 5 SBUs outside of VMBS, where I work. There is also VM Wealth Management that assists members with investing their money to get higher returns. There's also Victorian Mutual Property Services, which is the real estate arm of the business, where persons who are interested in buying or selling property can reach out to a real estate agent to assist you in locating or selling, finding a property or selling your property. There's VM Money Transfer, and there is also Victorian Mutual Pension Management. And this is for persons who do not have a formal pension in place because they're not formally employed. You can reach out to VM Pension and they can assist you with your own individual contribution retirement scheme, individual retirement scheme, the IRS, right? So there's something for everybody at every stage of life. And as I said, there are many benefits of becoming a member of the society. It's pretty easy. I'm saying a lot. All you require to become a member is your government issued ID, TRN, your proof of address, which can be a utility bill or bank statement or credit card statement in your name, your proof of income, which is your pay slip, and the 2 references, their names and contact number, the usual categories of references. It's any of those persons, JP, lawyer, pastor, medical doctor, or an existing account holder of the society, any of these persons, and that's it. And $1,000 to start your regular savings account. That's it.
Well, sounds very good. And I know that there are persons who are listening and they'll be checking out those very good products, and those are products that will make your financial future better, not bitter.
Absolutely.
Yeah, so I want to give thanks again to Ms. Diane Campbell and on behalf of the team Sustained by Grace Ministries and Outreach. It was a pleasure having you and as our guests, and also to all our viewing and listening audience. for watching. Remember that grace is all you need, and it is sufficient for you. May God bless you, and may you have a great day or great night wherever and whatever time you're viewing this broadcast. Peace be unto you. On behalf of Omoy and Tanya, I'm saying you are greater when you have no debt, but you're better when you pay it off. This is my beloved saying,